Hey everyone, Ryan with DDS here. Do you like it when someone steals from you? Of course not, nobody does. Well, here's the uncomfortable truth. If you're in network with a lot of dental insurance plans, especially navigating the complicated world of PPOs, direct contracts, and those leased or umbrella networks, there's a very high chance that someone is effectively stealing it from your practice, little by little, claim by claim. It's happening through systemic underpayments and discrepancies that often fly completely under the radar in all the day-to-day chaos. It isn't just an administrative headache. Frankly, it's something that could be costing your practice tens, even hundreds of thousands of dollars without you even realizing it. Today, we're diving deep into how this happens, the crucial differences between direct and leased network contracts, and why you meticulously checking your EOBs isn't optional. It's essential for survival. It's complicated, right? That complication isn't just annoying. Sometimes it feels like it's intentionally designed to make it easier for insurance companies to, well, keep money that rightfully belongs to your practice. If you're heavily involved with PPOs and you aren't meticulously checking your EOBs against your actual negotiated fee schedules, I can almost guarantee that you're leaving money on the table. This video will shed light on how these systems work, where the pitfalls lie, and why verifying every single payment is absolutely critical to your financial health. Staying vigilant here directly impacts your ability to make more money and build a practice that truly serves you. Let's start with the basics. Many of us began our insurance journey with direct contracts. You sign up directly with Delta Dental, MetLife, Aetna, Cigna, the big players. And the upside, it's relatively straightforward. You have one contract, one fee schedule usually, and a direct line, theoretically, to the company. The significant downside is that those direct contract fees are often much lower than your UCR. For many of these, it is probably 40 to 50% less than the normal fee in our practice. They dictate the terms, and often those terms aren't fantastic for your bottom line. The fewer of these direct, low-paying contracts you have, generally the simpler your insurance administration is, and the easier it becomes to spot if something weird is happening with payments. Then maybe 5, 10 plus years ago, these other things started popping up everywhere. Leased networks, umbrella networks, network sharing agreements. You might know them by names associated with companies like Connection Dental, Carrington, Zealous, or others. The pitch was appealing. You could sign up with one of these leased networks and suddenly you'd be considered in network for patients who had plans with several different major carriers, maybe even some you weren't directly contracted with. And here was the real kicker. The fee schedules offered through these leased networks were often significantly higher than the direct contract fees from the major carriers themselves. It wasn't uncommon to see a situation like this where maybe your direct contract with MetLife paid $800 for a crown, but if you joined a leased network, which included MetLife plans, their fee schedule might be $1,000, $1,100, or even $1,200 for the exact same crown, for the exact same patient plan. At first glance, this seems like a no-brainer, right? Drop the low-paying direct contracts, sign up with a few of those higher-paying umbrella networks, get access to more patients, and get paid more per procedure. Well, what's not to love? That certainly was the initial appeal, and many dentists, including myself, moved in that direction, terminating direct contracts and enrolling in these leased arrangements. But here's where the complicated beast rears its ugly head. While the potential fees looked better on paper, the operational complexity increased exponentially. Suddenly, you weren't just dealing with a few direct relationships. You were dealing with a leased network, which in turn was dealing with multiple insurance carriers, which were administrating plans for countless employers, and the layers multiplied. And what I've discovered, particularly over the last couple of years as I really dug into this, is that the complexity creates the perfect smokescreen. It becomes incredibly difficult to track accurately which fee schedule should apply to which patient under which plan, especially when they access your network status through a third-party lease. And crucially, it makes it much harder to notice when an insurance company simply isn't paying you what they agreed to pay. When things get this convoluted, it's easier for money to slip through the cracks, or perhaps be actively withheld. Think about the negotiation process. When I used to negotiate direct contracts or even these leased network contracts, it was a back and forth. I'd submit my fees, they'd counter, we'd haggle, and eventually, hopefully, we'd land on a fee schedule that felt acceptable, one I could build my practice finances around. Once I got that confirmation, that signed agreement with the fee schedule attached, I felt a sense of accomplishment. Okay, great, done, locked in, let's move on to treating patients. But that sense of security turned out to be very misplaced. Over the last year or so, I started noticing discrepancies. An EOB would come through for a specific procedure, maybe for a patient covered by a certain major carrier, but accessing through a leased network. And that payment amount just didn't match the fee schedule I had signed and agreed upon with the leased network. It was lower, sometimes slightly, sometimes significantly. I am currently dealing with one that is paying over 25% less than the agreed upon fee schedule. And what I found, digging deeper and deeper, analyzing EOBs across different plans and different carriers accessed through these leased networks, well, it probably won't shock you. Insurance companies are not always paying according to the fee schedule they signed up and agreed upon. It happens far too often. What's worse is trying to get it fixed. It's like a shell game where nobody wants to take responsibility. I'll see an EOB from, say, Emeritus, but then the payment's wrong. It's based on my contract with an umbrella company, so I call Emeritus. Half the time that the representative has no idea why the payment is what it is. They might see the claim was processed through the umbrella network, but they can't explain the discrepancy. And my contract fee with the umbrella network, they'll often say, well, you need to call the umbrella network. They control the fee schedule. Okay, fine. So I call the umbrella network. I explain the situation, provide the EOB. I point to our signed contract and fee schedule. Sometimes they acknowledge the error. Sometimes they give me some convoluted story about plan specifics or processing glitches, and quite often they end up pointing the finger back, saying something like, well, we can file an appeal. I'll send you in a form to fill out, and then we'll send it back to the insurance company. It could take 90 days to process. And it becomes this endless loop of finger pointing. And meanwhile, your practice is consistently getting shortchanged. No matter what you do or request, someone is always saying it'll take 60 to 90 days for anything to happen. It is insane. I'm working with one insurance company where I've done this 3 times, and each time I have to wait up to 90 days for something to happen. Pretty soon it'll be a year just waiting for several interactions. Like, how is this legal? This isn't an isolated incident. I'm finding this happening across multiple lease network arrangements, with payments coming in incorrectly from various major carriers accessing those networks. It's happening so frequently in my practices that I know it must be happening to many of you reading this right now or listening to this right now. We're talking about the consistent underpayment, sometimes going back months or even years before being noticed. Most dental teams, understandably, are incredibly busy. They're focused on patient care, scheduling, and managing day-to-day operations. Verifying every single line item on every single EOB against potentially dozens of different fee schedules associated with various direct and lease network contracts. It's a monumental task, and sadly, because it's so complex, most practices simply don't have the bandwidth or the systems in place to catch these errors consistently. The insurance companies likely know this, but if you are in network, whether directly or through a lease network, you absolutely need to be checking your EOBs religiously. You have to compare the actual payment for each procedure code against the specific agreed upon fee schedule for that patient's plan and network access. If you don't, you are essentially letting the insurance companies decide how much they feel like paying you on any given day. I currently have multiple insurance companies accessed through lease networks that have been paying my practices incorrectly for years. We discovered this, and for the past 6 months, maybe even longer now, we have been fighting tooth and nail to get these issues corrected. We're demanding they fix the fee schedules in their systems moving forward, and we're trying to get past claims from months or years ago reprocessed correctly and the difference paid. It is an absolute nightmare. The amount of administrative time, frustration, follow-up required is staggering. You deal with layers of your bureaucracy, representatives who don't understand the problem or don't have the authority to fix it, and constant delays. Honestly, it leads you to conclude that these organizations are either incredibly corrupt, intentionally setting up systems that allow them to underpay claims systematically, or they're incredibly mismanaged and siloed that one hand doesn't know what the other hand is doing, leading to constant errors. Frankly, it feels like it's probably a combination of both. So what does this mean for you, the practicing dentist, trying to run a profitable business and take care of patients? It means you cannot trust that system. You cannot assume that just because you have a signed contract with a fee schedule that you are actually getting paid those fees. Verification is not optional, it's essential. If you're heavily involved in PPOs, especially through leased networks, and you aren't dedicating resources, whether it's your time, your office manager's time, or utilizing a third-party verification service to audit your EOBs against your contracts, you are very likely losing a significant amount of money. Think about it, even $10 to $20 underpayment per procedure, multiplied across hundreds or thousands of procedures per year, adds up to an incredible amount of money that belongs in your practice, not in the insurance company's coffers. Checking those EOBs isn't just busy work, it's uncovering lost revenue. So what can you actually do about this? Well, start auditing. Pick one plan or one network you suspect might have issues, pull the last few months of EOBs, compare them against your contracted fee schedule. See what you find. Implement a system, even if it's spot checking a percentage of claims initially, to make this verification process routine. Train your team on what to look for and how to escalate discrepancies. Consider software or services that help automate parts of this. Yeah, it does take effort, but the potential return on the effort is enormous. I'm genuinely curious to hear about your experiences with this. What's your most frustrating experience you've had trying to get an insurance company to pay correctly according to your contract? Share it in the comments below. Let's compare notes and maybe find some collective solutions or warning signs. Your experience could help another dentist avoid the same pitfall. And if you're finding these insights helpful for navigating the business side of dentistry and want more strategies to protect your practice finances and boost your profitability, please go ahead and hit that subscribe button and notification bell so you don't miss any future videos. Ultimately, vigilance with insurance contracts and payments is a critical piece of building a successful practice. The key takeaway today is that you absolutely must verify your insurance companies that they are paying you according to your agreed upon contracts. Errors, discrepancies, and underpayments are rampant, especially within the complexity of leased networks. Don't assume, verify. Protect your bottom line. So take what you learned today about scrutinizing these insurance payments and put it into action. Building a practice that serves you, one that's more profitable and enjoyable, that's the goal. Let's keep working together to make dentistry fun, fulfilling, and rewarding. Subscribe so you don't miss the next strategy, and I'll see you soon.